Have you ever just stared at a stock chart, right? All those wild spikes and dips, and it just looks like total chaos. You have to wonder, is there any method to the madness? Well, what if I told you there are hidden geometric patterns repeating over and over again that could actually give us a hint about what's coming next? So, yeah, is there a hidden order? And how do we even begin to find it? The answer lies in an idea that's been around for a while, but it's now being absolutely supercharged by technology. We're talking about algorithmic harmonic patterns. Okay, so what exactly is a harmonic pattern? Well, put simply, it's a very specific shape on a price chart. But here's the key. It is not just any old shape. Its entire structure is defined by really precise mathematical relationships. And these relationships come from Fibonacci numbers. You know, that famous sequence you see everywhere in nature from seashells to galaxies. These numbers help traders pinpoint zones where the price might be about to turn around. All right, so here's our game plan. We're going to uncover the market's hidden geometry, break down the anatomy of these patterns, crack the Fibonacci secret code, see how you can actually teach a computer to spot them, and then figure out what happens when one is found. And finally, we'll get to the big question. Are we looking at a pattern or a prediction? First up, let's get into the why. Why would anybody even bother looking for geometric shapes in a financial chart? Well, the core philosophy behind it is actually pretty fascinating. You see, the whole theory is built on this one powerful belief. Human psychology, the fear and greed that drives all that buying and selling, it doesn't really change over time. And because of that, the patterns created by all that human emotion tend to repeat themselves in these beautiful geometric forms. It's really about finding the market's memory. So, if these patterns are out there, what do they actually look like? Let's dissect the universal structure that pretty much all of them share. It all comes down to 5 key points. Every single harmonic pattern is built from 5 pivot points, and we label them X, A, B, C, and D. It's kind of like connecting the dots. X to A, that's your initial big move. Then you get a pull back to point B. Then another push in that original direction to point C. And then there's point D. Point D is the big one. It's the critical completion point where all the geometric and mathematical rules converge to basically scream, hey, pay attention, something big might happen right here. Now this is where it gets really cool. What makes a bat pattern different from a crab pattern isn't the 5 points themselves. No, it's the precise mathematical recipe that connects them. Let's look under the hood. You see, the distances between these points can't just be anything. They have to stick to specific ratios, all based on that Fibonacci sequence. These ratios create what you could call a mathematical recipe, or like a unique DNA for each and every pattern. It's what gives each one its name and, well, its potential power. And this table lays out those recipes perfectly. Just look at the Gartley pattern up there on the top row. For a shape to be a true Gartley, the B point has to pull back somewhere between 0.55 and 0.72 of that first leg. Now compare that to the crab down at the bottom. The B point is different, sure, but look at that D point. It extends way further out, between 1.25 and 1.8. It's these tiny but absolutely crucial differences in the math that an algorithm is built to find. Okay, so we've got a visual shape and a mathematical recipe. That's great. But how in the world do you get a machine to find it in real time across thousands of different charts? It's actually a lot more straightforward than it sounds. You basically just turn that recipe into a simple, logical checklist. An algorithm, in this context, is really just a series of if-then questions. You know, if point B is within this range, and if point C is within its range, and if point D is within its range, then, congratulations, we have a valid pattern. And this is exactly what that checklist looks like as code. Now, whoa, don't get bogged down in the syntax or the symbols. You don't need to read it. Just look at the logic. The code on the left and the code on the right, they're in totally different languages, but they're asking the exact same question. Does the XB ratio fall between 0.55 and 0.618? It's a simple yes or no check, and the computer just does that for every single part of the recipe. That is all the algorithm is doing. So the computer has crunched all the numbers. It's gone through the checklist, and it found a match. What's the end result? What does the trader actually see on their screen? The prize is something called a potential reversal zone, or a PRZ. This is the payoff. This is the X marks the spot. It's that specific area on the chart where the D point is complete, signaling that all the conditions for that pattern's recipe have been met. Now, it is not a guarantee, but it is a calculated high probability area where the current trend just might run out of gas and turn around. So let's just bring it all home. The algorithm is scanning the market constantly. It finds 5 pivot points. It measures the ratios between them. It checks those measurements against its list of known recipes, and if it finds a match, bam! It flags that D point as a potential reversal zone and can even fire off an automatic alert right to the trader's phone or computer. It is a fully automated detection system. So we have this amazing, fully automated system for finding these incredibly specific patterns. But that brings us to the biggest and maybe the most important question of all. What does this really mean? And this right here is probably the most important takeaway from this whole thing. Harmonic patterns are not magic. They are not crystal balls. They do not predict the future. They are just really sophisticated tools for identifying probabilities. They find moments in the market that look geometrically and mathematically similar to moments in the past where reversals happened. It's all about playing the odds. And that leaves us with one final, kind of mind-bending question to think about. When thousands, maybe millions of algorithms, all programmed with the exact same geometric rules, all identify the exact same potential reversal zone, and then they all act on it at the same time, are they just observing a pattern that was already there? Or does their collective action become a self-fulfilling prophecy, actually creating the very reversal they were all programmed to find? Something to chew on.